You are watching Daily Market Pulse. Today is Tuesday, May 12, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Bitcoin faces a major drop, while gold is set for a historic bull run. Here's what you need to know. Today's agenda: Federal Reserve holds rates, ECB hikes loom, gold's historic bull run, Bitcoin's medium-term correction, commodities and geopolitics, U.S. equities reach new highs, market update. Let's start with the big picture: what central banks are doing. The Federal Reserve has decided to hold interest rates steady, keeping them in the 3.5% to 3.8% range. This was Jerome Powell's final press conference as Federal Reserve Chair, and the markets are now pricing in potential rate cuts starting in September or October. The Federal Reserve feels it has flexibility due to a stable labor market, but inflation risks from the Iran conflict are making immediate cuts less likely. Across the Atlantic, the European Central Bank is expected to raise rates twice this year. This is driven by inflation that's being pushed higher by the Iran war. ECB President Christine Lagarde also made it clear that she doesn't see private stablecoins as a way to boost the euro's global standing, emphasizing the continued essential role of central banks in these fragmented times. Now let's talk about the shining metal, gold. Gold is trading at about $4,710, slightly lower on the day. Analysts like Pierre Lassonde are not just bullish, they're calling it a historic bull market, with a target of about $17,250 within 3 years. The drivers are clear: massive U.S. fiscal deficits, central banks aggressively shifting their reserves away from the dollar and into gold, and a growing influence of physical demand in markets like Shanghai. In fact, central banks have doubled their gold holdings, while the dollar's share in reserves is shrinking. This is a fundamental shift. Gold is becoming a direct hedge against the debasement of fiat currencies, especially the US dollar, as debt levels continue to climb. We're seeing strong demand for precious metals, with silver even outperforming gold recently. As investors seek safety amidst global uncertainty, gold is trading at about $4,710, slightly lower on the day. Now let's turn to the digital asset space, specifically Bitcoin. Bitcoin is currently trading around about $81,000, but the outlook for the medium term is decidedly bearish. Analysts are predicting a high probability of a significant correction, with Bitcoin potentially testing the about $48,000 to about $57,000 range before finding a bottom, possibly in October. This is largely due to over-leveraged retail traders being forced to liquidate their positions. While institutional investors are still accumulating through ETFs, these retail liquidations are expected to drive prices lower. Michael Terpin, a key figure in crypto, even suggests shorting rallies in the about $80,000 range as a trading opportunity. Despite this short-term pain, the long-term narrative of Bitcoin as digital gold and a hedge against dollar debasement remains intact. For now, investors should brace for volatility and look for accumulation opportunities at lower price points later in the year. Moving on to the energy markets. Oil prices are showing signs of stabilization after a significant spike caused by tensions in the Strait of Hormuz. WTI crude is currently trading between about $99 and about $101 a barrel, with Brent crude hovering around about $118 to about $120. The disruption of supply from the Strait of Hormuz, which handles a massive amount of oil, caused a sharp increase in prices. While hopes for a peace deal have eased some of that immediate pressure, the risk premium remains. Goldman Sachs believes prices could stay above about $100, and the EIA is forecasting a potential peak for the second quarter near about $115 a barrel. This volatility in oil prices is a key driver of inflation, impacting everything from transportation to manufacturing costs. So, while prices have stabilized for now, the ongoing conflict in the Middle East means oil markets will remain highly sensitive to geopolitical events. Despite global uncertainties, U.S. stocks are soaring. U.S. stock markets are hitting new records, with the S&P 500 and Nasdaq leading the charge. Tech stocks are the main engine behind this rally, fueled by a surprisingly stable labor market and strong corporate earnings reports. What's particularly interesting is the U.S. dollar index, which is currently at a 10-week low. This is quite unusual, especially when you consider the geopolitical tensions in the Middle East, which normally would drive investors towards the perceived safety of the dollar. Instead, markets seem to be pricing in a soft landing scenario for the U.S. economy, with underlying strength and solid company profits supporting this rally. Investors are clearly focused on growth prospects, even as the dollar shows unexpected weakness. We'll be watching upcoming corporate earnings reports very closely for the second quarter, as they will give us a clearer picture of how companies are truly performing. Now let us turn to today's live market snapshot, where gold, crypto, stocks. Now for our daily financial market update. Here is where the key asset classes stand as of Tuesday, May 12, 2026. Gold is trading at about $4,710, slightly lower on the day, and is slightly higher over the past 5 sessions. Silver is at about $84, lower today and strongly higher over the past 5 sessions. In crypto, Bitcoin is at about $80,700, lower on the session, and slightly higher over the past 5 sessions. Ethereum is at about $2,300, lower today. Other major crypto, Solana at about $95, lower. BNB at about $662, lower. XRP at about $1.448, lower. On equities, the S&P 500 at 7,412.8, slightly higher. The Nasdaq at 26,274.1, slightly higher. The Dow at 49,704.5, slightly higher. Internationally, the DAX at 24,094.7, lower. The Nikkei at 62,742.6, slightly higher. The FTSE at 10,220.4, slightly lower. On the bond side, the 10-year U.S. Treasury yield is at 4.4%, higher on the session, and the 30-year yield is at 5%, slightly higher. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at about $101 per barrel, strongly higher. The dollar index at 98.27, slightly higher. Euro dollar at 1.175, slightly lower. The picture is mixed across asset classes, with no dominant directional theme yet. Investors are watching macro catalysts closely before committing to a clear risk stance. So what does today mean for you? It's a clear signal to consider rebalancing. Gold and gold-related assets look like strong long-term hedges against currency debasement, while Bitcoin investors might want to brace for a bumpy ride in the short to medium term, with opportunities to accumulate on dips later in the year. Thank you for your attention, and we will see you again tomorrow.